Yeah, good evening, everybody. It's Francis here, and then I'll be bringing you all the market overview for this coming week and what we were looking at. And then I trust that you all will find this very informative. Trading involves risks. You have to be very careful in following your trading plan, and then no matter what you're looking at, you have to know that this journey is a long-term journey. So you want to follow your trading plan. You don't want to lose while trying to over leverage in your accounts. So with that being said, I'm just going to be looking at some few trade setup I'm hoping on to really play out this week and then take advantage of it. There's some opportunities that can give you some swing trade opportunity, and there's some opportunity that you take scalping and then making some sense out of it. So before I get started, I want you to understand that trading involves a whole lot of patience and a lot of understanding. And then while doing that, you have to really train yourself, train your spirit to enable it to teach your body how to trade well. And I see this because there are some persons that they make a lot of mistake trying to just do um some gambling stuff like that. And this is not what we want to be doing. And then while doing that, you find out that you keep losing money, right? So you have to teach your spirit how to trade. And when you teach your spirit how to trade, it will give you the confidence to take trades effortlessly. So with that being said, um, I'm going to be looking at some setups for us this week, and I want you to pay attention to this analysis and watch how price is going to make some sense out of it. So what do we look out for in the market? Basic things we look out for, and the way we trade at here in the software FX is we trade this one money concept, right? And then we look at five basic things. The first thing we look at is the trend of the markets. The second thing we look at is trading range, and the third thing we look at is where the bank's hiding. That is liquidity, right? The fourth thing we look at is institutional areas, and then you can use fib for confluences, fib levels also. So we look out for these areas, and then we take advantage of the market. The first market I'll be looking at, is the volatility 10-1S on the daily time frame. Look at the daily time frame. I'll be paying attention to the daily time frame, and then we can all look out for smaller time frame as it goes by, right? Based on structure, we can see that this is officially a downtrend market, but I've actually done my weekly overview, right? I've done my weekly overview here. So I'm just going to be spotting out some things for you all, right? Why I'm anticipating prices going up here. And why I'm anticipating price breaking up here. Or if you look at this trend, it's still a downtrend because this is the lower low, right? And then we are anticipating that price is going to give us a lower high and start pushing down. But based on the fact that there are a lot of liquidities that have been created here and the weekly point of interest as well, you get what I'm saying? So that's why I'm looking out for a break of structure of this liquidity, and then we look for opportunity to buy around this area. And then if you notice as well, like I'm looking at this area based on the fact that uh, there was liquidity that was cleared here. So we can all pay attention to the 4 hours time frame. That is after the break of structure on the daily time frame. That is when we can have the confidence of looking out for this trade, right? So there's a whole lot of areas that price can react off from. So once price breaks structure on the daily time frame, right? There are different areas that can really look out for buying opportunities, right? Because I know that as you can see here, this is the 4 hours time frame. They say liquidity area here, so we can always get a sell to buy scenario on this trade setup. But visually, what I'm looking out for is we're officially waiting for a break of structure off from this time frame. That is volatility 10, right? So when we get a break of structure, um, we can anticipate what we call a down move. But I'm looking at this area. I like this area. You can see this area. Um, you can see this area. I like this area. Number one, there's an imbalance here, imbalance in price. Number two, we also have this institutional candle. So I'm looking at this area for where price can go to mitigate up from. So that is what I'm looking out for on volatility. Then one is I'm looking at volatility 10 itself. Let me show you something I'm looking at on the daily, and then I'll go to the smaller time frame to show you. All right, off looking at the trend, I taught you all what we are looking out for, right? So these same basic things are what we look out for over and over again, right? And that's what we call the institutional order flow, right? As you can see, based on trend, we have this higher high, higher low, higher high. What do we want to see, right? We want to see the higher low, right? And then if I bring out my fib, um, you understand what I'm saying? Smart money always look to buy at the 50% and below. As you can see, um, what I'm anticipating is a deep retracement towards the 886 or the 786, right? As you can see, we still have some imbalances that price needs to fill. But this is a daily time frame. We can always go down to the 4 hours to go and look out for smaller time frame entries and take advantage of it. We get what I'm saying. Look out for the smaller time frame and take advantage of it. And this is a smaller time frame. Then I really like this area. This is an institutional area that I'm looking out for market to play if that place does not work, or which I believe is going to work, right? Because all this has mitigated um all these areas. So I believe like this is a good area. So that's why I'm looking at the 1 hour as my possible areas for sales. Um, two confluences for this trade setup. I'm seeing an harmonic pattern on the 1 hour, right? I'm seeing an harmonic pattern on the 1 hour. And then let me draw that. Let me show you what I'm seeing. Um, this is like a Gatly, it's like a bearish Gatly formation, right? So I can always draw what I'm seeing. Let me bring out my um so this can play out like this, and then possibly the 786 if it reacts from the 786, but I'm seeing that price can come out react all from this 86 and then start dipping. So we look out for smaller time break of structure. Like I told you all, we can check we can play the 50% of this candle, playing the 30 or on the 30-minute time frame, or we can look out for break of structures, because something about break of structure is that break of structure help you to achieve two things. It helps you to achieve smaller time frame entries, and also it gives us certainty that that trade will be very, very visible. And then as you can see, this area is, and there's an imbalance here. There's an imbalance here. So price can come out, feel this imbalance and start reacting off. Or I'm still seeing this area. Okay, price might deep down, keep pushing down. So it's either it's reaccumulate here again, or it keeps on pushing down. Do you understand what I'm saying? Because we are looking forward to price coming down to our point of interest and the likes like that. And as you can see on the 1 hour, we have this imbalance here. The price we still have to feel, definitely. So that's what I'm looking at on the volatility 10. Also, let's go to volatility 100 on the daily. The same thing that we look out for, right? The trend, the range, liquidity, institutional area, fib levels, right? This is for the synthetic indices. So lower low, lower high, low, the break of structure. And then what am I looking out for? Number one, I'm looking at this area because it's an area that looks like very clean area, an institutional area. And also we have this imbalance on the daily time frame. And if I bring out my fib, right? I can bring out my fib. That area looks like the 618 area, which on 618 towards, yeah, as you can see, 618 towards the 786. So we look out for smaller time frame BOS, right? Smaller time frame BOS on our daily time frame. So that's my POY. So let me show you how that place looks like on the 4 hours. As you can see, this is the 4 hours time frame. This is 4 hours time frame. So you just to go from time frames to time frame. This is an area of liquidity. Price will come for this point here. And as you can see now, the 4 hours time frame now, price has done something very, very unique. Price has higher high, higher low, higher low. Price has broken structure. I shared it with the team yesterday about structure breaking or structure breaking And then now we've confirmed things again. So we can always get it by a sell to buy scenario again on this point here. So how do we get that? How do we make that possible? We come down to the 1 hour time frame to look out for, areas that price can react off from and take the market towards our point of interest. So with that being said, so what am I looking out for? Number one, what's my highest blue towards? Okay, this area, price can react up from this area. If price does not react from this institutional candle area, price can come back for this area here. So, and as you can see, it's cleared this liquidity here, and then broke structure. Though it has mitigated up from there, but I'm just looking at this imbalance here. The price might come back for this area, or price might mitigate up from this area. Let me check the 30-minute time frame to be sure what price will likely do at that area. So it's just to keep yourself acquainted with all these setups, and as you can see there, okay, price has mitigated. So I like this area, number one. So I like this area. The 30 minutes price has broken structure and looks very clean. I like the 30-minute point of interest. So price might come back for this area, right? This is the FU candle, right? FU candle, additional candle. So price can come and mitigate up from here and start pushing down. So you get what I'm saying? So we either look for a clean 1 minute break of structure, we enter out from that area. So remember, I'm paying attention to an area here on the 1 hour. Let me go back to the 1 hour. You just look at, be very careful of price reactions. Just very, very being careful of price reactions. And that is how that looks like. So price can come back for this area, right? This area, and start dipping down and start pushing down. So we look for to taking the market down towards all these areas. And then maybe there can be possible reaccumulation around here. And don't forget that we still have all this imbalance. The price will come back for that area. So that is volatility 101s, right? Good. And also this is volatility 25 1s. We had a clean break of structure, and then you can see price has started reacting up from there. So I shared this yesterday. Let's go to the 1 hour time frame to look out for what price is doing presently now, right? Price is reacting up from the 50% of this candle. 50% of this candle. Let me see if that is really true. Yeah, looking like that. So let's look at the 5 minutes to see what is going on there. So these are structural rules. As you can see, as the 5 minute broken structure already. The same thing we look out from this higher time frame, the same thing we look out from the smaller time frame, honestly. So as you can see, this has reacted up from here. This was the area we should have take our buys from, ourselves from here. This area, if it's that we got the entry, because as you can see, the 5 minutes higher high, higher low, higher high, and price broke structure here. And they came back for this last candle that cleared liquidity here and start pushing it back. As you can see, but this is how to get the smaller time frame entries and start pushing down, right? And start pushing the market down. So all right, so these are the 4 trades I'm looking out for. Looking at this one, it sells for this 10. I'm looking at the the sell to buy on volatility 101s and also 25. So you take advantage of this setup. At least you should make money for this week. I promise you. So I shared a trade setup on volatility 100. That was last week. I don't know. I called the trade off from here, this area here. Let me show you all from the 4 hours time frame. Let me show you all from the 4 hours time frame. Just be patient. Chart is loading. All right. So what was I looking at? What did I see? What did I call the trade from? When I saw this setup, price broke structural, and then price was around this area, and then I was waiting for an entry off from this region. Um, so why was I looking out for an entry off from that area? Because number one, that area looks very clean as an additional area. Because if you draw your fib again, based on structure, having structure giving us a confirmation for break of structure, draw your fib, that area looks like the 786. So it's an area that smart money likes to buy all the way from, right? And that area has a very unique institutional area there. Can we see that smart money cube there? So it looks very clean. Smart money cube. That area was an area that price reacts often from. Can you see this? Can you see this? A smart money cube area. The price started reacting up from there. So if you have played the open of that area, you have still been. But I waited for the 15 minutes around this area, and then I was seeing like a pattern, harmonic pattern, and I think someone here stop loss below here, and price started going. That was a 1 week trade. So you get what I'm saying. So if you have a setup, you see how potential the trade setup. Look at it from the daily time frame. Look at daily target. You enter from smaller time frame. So that is how that looks like. So you want to be patient in knowing how to take your trade. Sometimes, you can look for a setup. You are the day trader, day trade trader. But if you are a swing trader, you look for a setup that you can take advantage of from it through the week, right? So with that being said, the main thing is risk management. Risk management is the key to staying long in this industry, according to what my mentor used to say, Mr. Wale. You all should pay attention to analysis and you get the best out of the market. Don't over leverage your account at all, right? Big 75 has been doing a lot of crazy stuff, right? And then let's quickly check it before I call it a day. Call it a day, right? The 75 has been doing some crazy stuff. I shared a particular area where some couple of days where I feel like price is going to react off from. But I was where price reacted off from. But the price action, I really don't like it because it's really slow and just consolidating. So the 75 has a lot of imbalances to cover off. Still have a lot of imbalances. So you can see price can still come back for this area and maybe come back to this area, right? And before it start pushing up, I'm still trying to watch the price action. 4 hours has had break of structure, a clean break of structure. So a lot of structural areas to point out. As you can see, price can still come back to this area. So if I like to get an entry up from volatility 25, 75, I mean to say I like this candle, this area personally to get my entry up from, right? Because you can see there's still an imbalance here. There's an imbalance here, and then this area can look like an area of liquidity. Probably will always clear that area off from the market. And then I said something about candles with no weak areas of imbalances. You can see this area number 1, and you can see this area number 2. So let's look at the price action of volatility 75 around this area and see. As you can see, it has created a lot of liquidity, a lot of trend line liquidity, a lot of liquidity, imbalance, smart money queue. So if you want to get a possible reaccumulation, we can look out for this area, a very clean area for possible area for reaccumulation. Price can reaccumulate everywhere. So if we start selling from here, this area looks like clean liquidity area. The market will react off from and clear that area. So I'm looking at this area for my sell, and here liquidity grab, here possible place for reaccumulation, imbalance, and that is how we look at the market. So with that being said, I wish you all a successful week. Don't give up, keep studying, Keep being yourself. You should be trading. It's your boy Francis. Bye.